In the wild world of real estate, playing defense is usually the smart move. But what happens when a company decides to go on the offense, even when the market's looking a little shaky? Well, that's exactly what Compass says they're doing. And in this explainer, we're going to break down their 5 big strategies for long-term growth.
I mean, this is the million-dollar question, right? With interest rates all over the place and not enough houses to go around, trying to plan for the future is tough. This kind of uncertainty really puts companies at a crossroads. Do you hunker down and cut back, or do you push forward and invest in growth?
And there you have it, Compass's answer loud and clear. That's a pretty bold statement. It's basically them telling investors, competitors, everyone, hey, we're not backing down. They're trying to position themselves as a company that can get things done no matter what the market is doing. They're playing to win. So the whole idea here is pretty simple, actually. They're being proactive, not reactive. The belief is that they've built a business that's meant to be resilient, one that can stick to its long-term game plan no matter which way the economic winds are blowing. It's all about consistency instead of just reacting to the latest headline. Okay, so what is this grand plan? Well, it's built on 5 key pillars that hold up their entire vision for the future. You can think of it as their 5-pronged attack on growth. Let's take a look at what they are.
So here they are, the big 5. Careful cost management, grabbing the best agents out there, building a powerful platform to make them more productive, some creative M&A, and growing other high-margin businesses. All right, now let's dive into what each one of these really means.
First up, being smart with money. This is all about running a tight ship, a lean, efficient operation. We're talking about things like optimizing their office space, being strategic with marketing dollars, and just making sure every single dollar is working hard. In a crazy market, your own costs are one of the few things you can actually control, which creates stability from the inside. Next, it's all about the people. It's no secret that in real estate, the best agents have the biggest networks and bring in the most deals. So Compass's strategy is to be the place these top performers want to be. And why is that so important? Well, because getting and keeping them is a direct line to grabbing more market share. It's simple. More talent equals more business. Pillar number 3 is all about technology. And we're not just talking about some basic email tool here. Compass is pouring resources into building its own all-in-one platform. The goal? To give their agents a serious competitive advantage with things like data analytics, marketing automation, you name it, all designed to help them close more deals faster. So Pillar 4 gets into strategic growth through mergers and acquisitions. Now, when they say creative, they don't just mean they're buying up every small brokerage they can find. No, it's more strategic. Maybe they'll buy a local property management company to add a new service, or a small tech startup that has a really cool marketing tool. It's about buying new skills and capabilities, not just getting bigger for the sake of it. And the final pillar is all about diversification. They're moving into related services like title and escrow, all the essential legal and financial stuff that has to happen to close a deal. The thing is, these businesses often have much higher profit margins than just agent commissions, which creates a more stable, predictable flow of cash for the company. All right, so we've looked at the 5 pillars. That's the how of their strategy. But what about the why? What's the end goal of all this work? Well, it really boils down to a very clear financial target. At the end of the day, it's about this, making money for the people who invested in the company. The entire 5-pillar plan is designed from the ground up to produce strong financial results and reward those shareholders for the long haul. And they use 2 main numbers to track how they're doing. Okay, so the first one is adjusted EBITDA. I know it sounds super technical, but just think of it as a checkup on the company's core business health. It basically shows how profitable they are from their day-to-day operations by stripping out a lot of the accounting noise. It gives you a really clear picture of how things are actually going. The second metric, and you could argue it's even more important, is free cash flow. This is the actual cold, hard cash the company has left over after paying all its bills and investing back into the business. This number is proof that the business model is working. It's the money that can be used to pay down debt or reinvest. A healthy company makes healthy free cash flow. Simple as that. So let's just tie this all together real quick. You've got the challenge, a housing market that nobody can predict. You've got the plan, a 5-part strategy mixing smart spending, top talent, and cool tech. And what's the goal? To create real long-term value for their shareholders. Which brings us to a final, interesting question. Is this whole plan just a really good defense against a bad market? Or is it actually the best offense? Maybe it's both. a plan that's tough enough to get through the storm, but also designed to come out even stronger on the other side. It's a huge ambition, and it's definitely going to be fascinating to watch how it all plays out.